So the response of the financial institutions has been that in certain markets, especially in Europe, banks are falling over themselves to be better capitalized. But the way in which they're going about it is to actually throw in a lot of confusion as to what kind of capital comprises the capital requirement that you require today. And actually the use of hybrid capital has increased as a result.
No, I think that the use of hybrid capital has not increased. I think that what we are seeing is a tendency to prepare for this new regulation of being based on core capital, which is, I mean, this better quality of capital I was mentioning. What you have is people, using, hybrid capital like convertible bonds into shares, convertible bonds into shares, as a way to bridge, the situation in which they are now with the start of the implementation of Basel III in 2013. You have this type of bridge instruments, but generally speaking, I think that everybody is moving in the direction of better quality of capital, and that's good. That's not bad. That's very good.
How cooperative have been the different regimes around the world on Basel III? I think the European banks generally take it as fait accompli in that they have to comply and so on. The Americans, the Chinese, the Indians are still sitting on the sidelines, aren't they?
No, but let me be very clear. I mean, we are all members of the Basel Committee. We are all members of the Financial Stability Board. When you're a member of the Basel Committee, you have the obligation to apply what is approved by the Basel Committee as a standard. So being in the Basel Committee is not a voluntary club. It has its advantages. You are there in the front line discussing, but also you have your responsibility. So no country that is a member of the Basel Committee will be in a situation where they will not apply Basel III. I think that all of them will apply Basel III with their time frame that is reasonable for them and given the developments in their own country.
But at the same time, they have to get it ratified domestically.
And yes, of course.
And yes. You would have different types of ratification. There will be ratification for the internationally active banks, for the banks that are essentially local.
Yeah. The Basel Committee is about internationally active banks. You have jurisdictions like Europe where we apply Basel III to the whole population of banks, and there are other countries that only apply Basel III to their biggest institutions. That is a national process. I mean, what is important from the point of view of level playing field in the global financial sector is that all internationally active banks are on the same capital rules. What you do with your domestic, non-sophisticated institution, each country has to decide what they want to do. In Europe, we have the policy of applying it to the whole population of banks. In other countries, they may have another policy.
What is your sense of how the implementation has been evolving, especially with the banks that have already decided to comply and have put their own schedules on paper? What is the practice now in terms of the way in which they raise capital? And second, really, the fact that capital is applied differently to different types of businesses and so on, there's this opportunity to sort of leverage capital requirements and, somewhat argue that there's an opportunity to be more creative even, in terms of how you apply capital.
If you have higher capital requirements, you have greater incentives to capital arbitrage. Let's not fool ourselves. That's, by definition, higher capital requirements means, higher capital arbitrage in principle. That's kind of a rational result. Having said that, I think that we are aware of that risk and we are ready to monitor that. In terms of the time frame of implementation, I think that what is very important is that we have devised a timetable that is very parsimonious. Basel III will start in 2013, but it will not be fully in place until 2019. We have to avoid, from the side of supervisor, to push for a faster implementation of Basel III. We have to leave this, to the industry and to each of the countries to decide how to do this. It is true that in many countries, and probably the country where I'm coming from is an example, you are starting to see an accelerated implementation of Basel III well in advance. We have to be careful that this is not seen, as a best practice or a practice that should be applied generally. We have devised a framework that will kick in very, very slowly. We thought that it was optimal, and we should let the countries and the banks implement Basel III within the time frame that was approved, how they fit they think it's appropriate.
Give us a sense of the conversation taking place between the BIS and, in fact, even your regulator, the Bank of Spain, with the G20 and the global agenda, which is really driven more by the politicians than it is by the banking community. What are the points of convergence, and what are some of the points of difficulty that you have?
I think that my personal vision is a very positive vision of all this process. The Basel Committee is a little bit of a small miracle because being a body that hasn't got any formal powers, we have been able to deliver, global standards for capital for the last 30 years that were applied all around the world. But this model, which is unique, is very difficult to implant in other areas. So the fact that you have a G20, the fact that you have a financial stability board, can be a help when you are trying to devise, measures that are need to be implemented globally, but also that are difficult to implement globally. So I see this relationship as really a synergy between the political sphere, if you want, and the more technical sphere. I don't see a contradiction. I don't see a competition. I see a lot of advantages in moments where you need to take tough regulatory decisions, to have the backing of bodies like the FSB and the G20. That is extremely important when you are dealing with such complex regulations that are going to create a real impact on many financial institutions.
Well, if you take some of the policies of the G20, they are so caught up with the desire to ensure that the macroeconomic framework is sound and it's liquid and it's manageable, it's controllable at the national level, that in many countries the banking system essentially is a tool to that, to macroeconomic intervention, basically, and the banking system is way too heavyweight in terms of dealing with macroeconomic issues. Given the different profile of the countries that make up the G20, to what extent is the conversation with the BIS an even level conversation? And there are points at which they will be trying to influence the banking system in a way that perhaps you would have to put a pushback.
But this is not the general direction of the dialogue with the G20. On the contrary, if you see what the G20 is doing, is promoting sound policies that, although may have a cost in the short run in terms of credit provision, do ensure that in the long run you have a safe and sound financial system that can finance growth in the economy on sound basis. I think that is really crucial. If a country tries to use the financial system and lending policies as a cyclical tool, this is bound to disaster. What you want to have is banks that are managed, looking at risk and pricing those risks in the credit concession that they have. Any other thing is not going to be a good idea in the long run.
Well, I guess a simpler way to ask the same question is, who leads who? The BIS leads the G20 or the G20 leads the BIS?
I think that it's very clear that the hierarchical relationship is the G20 is at the top. I mean, we are talking about finance ministers, prime ministers of the greatest countries in the world, emerging and developed countries. The BIS is of a technical nature. It has the technical capacity. It is independent because it's basically formed by, it's formed by central bankers that are independent. I wouldn't say that who leads what. It's very clear that on the legislative initiatives, the G20 has the power to do whatever is needed. The BIS has the technical capacity to inform those legislative decisions, and I kind of see it as a relationship that works in both directions.